Today, we welcome Andrew Smalley with Movement Mortgage as part of our Lender Spotlight series. Welcome, Andrew.
Thanks for having me, Dennis.
Right. Now, this is the second one of these that we've done, so we'll take a little different track here today and start off with talking about how inflation is affecting mortgage rates and if you see them going down anytime soon, because they're a little bit high right now.
Yeah, that is a really big deal right now. I think if you were to search like the most Googled terms, I bet you inflation, recession would be right at the top. And inflation's coming down. It's just not coming down at the rate they had hoped. Inflation was at about 9% in June of 22, and here we are in June of 23. It's at about 4%. So it's
Now, is
come
that
down.
particular to the home market, or is that inflation in general?
Oh, that's just inflation. There's a couple. That's what's called the headline inflation. Is we live in a country that loves to spend money, right? So the consumer is very resilient right now. And to give you an idea, the credit card debt is at the highest it's ever been. It's actually approaching almost $1 trillion. So it is extremely high. And what comes with that is eventually those credit cards will max out. People won't be able to continue spending money. And when that happens, we'll start seeing inflation continue to trickle down a bit. But there are just so many factors that go into it. It's not only the core CPI and some of that data that we get, but it's also the unemployment rate. That's a big part of this, right? If the unemployment rate's low, that means people are, probably still going to be spending money as they normally would, versus if someone were to lose their job, sadly, they probably have to cut expenses, which will slow down the economy, which brings down inflation. So sadly, the unemployment rate really has to go up a little higher for inflation to kind of get a little bit more under control. It's just one of those unfortunate things in economics where that's what kind of slows down the economy, is when people can't spend as much money. So that's kind of where we're at. I do expect rates here, I would say in the next 6 months, to kind of give you a forecast of maybe getting into the fives. But what I'll say with that is I'm urging a lot of my clients now that even though rates aren't in an ideal spot, there's less competition than usual, right? Because what happens when rates get into the fives, more buyers come into the market. More buyers creates more competition. So if I was a buyer now, I would prefer to buy a home at a slightly higher rate, maybe not getting as big of a bidding war, knowing I can refinance that rate in the next 6 to 12 months, as opposed to waiting for rates to get into the fives. Now I'm potentially getting into a crazy bidding war, 50, 100K over asking price. So that's not really an ideal situation to be in. And that's the beauty of a home is you can always refinance out of it. And I think that's the better strategy for what the current market is.
Sure. Okay. And now I think that credit card debt would drop significantly if my partner would start paying off some of his. So we'll see what happens there. So one of the things that we touched on last time and really discovered that you and I have similar passions for the same subject, but different fields, and that is education. Because a lot of what I do for my clients, who are mostly small businesses, is I do a lot of their marketing for them. But my passion is educating other small businesses that may never hear of me or may never have the need to use me, but for them to understand how important it is to embrace digital marketing and things of that nature. And you do something similar for people that have never owned homes before. Why don't you talk about that a little bit?
Yeah, those are really some of my favorite clientele to work with, the first-time home buyers, because some of them may buy a home once in their life, so to be able to walk them through the process and just explain everything A to Z and going over different loan programs and talking different strategies. And it's especially important in this kind of market that we're in, because not only, talking to them about, different loan programs, but also educating them on, okay, if we're going to put an offer in, we really need to make this offer as attractive as possible, because in a lot of cases there's double-digit offers on the table. So being able to, like, one of the things I do all the time is anytime an offer goes in, I call the listing agent. I'm able to tell the listing agent, hey, from a lender's perspective, this client is rock solid. They have a stable job. They have excellent credit. I can close this loan in a month. And a lot of what we're doing now too, or we're actually pre-underwriting files, which basically means a live underwriter has reviewed everything. So it allows us to close a loan now in 3 weeks as opposed to a month. So if you're in a situation where the seller has to move quickly, that is another really important piece. And then I'm also always making sure clients send me listings that they like, because I like to run the numbers for them. Because like, if they went from Wakefield, for example, to Methuen, those property taxes are going to look a little different. And then add to that, mortgage rates usually change several times a day. So I always want to make sure that we're not having people go house poor, right? We don't want people thinking one thing, they put an offer on a home, and then they're getting what the payments are in the home. So it should be the reverse of that, making sure that I'm speaking to the client. Hey, here's an idea what your payment's going to be. Is that comfortable? Good, green light to put an offer in. That's a part that I find very important in our world, to just make sure people know what they're buying, and now more than ever, because rates, like we just talked about, where they've changed 1.5 points over the course of just a couple of months. And when you're dealing with a potential $400,000, $500,000, $600,000, $700,000 loan amount, a quarter, a half point can move a payment quite a bit.
Yeah, absolutely. Now, I was in my early 30s when I bought my first house. And so I was fairly, I thought familiar with the process. But the one thing that surprised me was that I thought it was just as simple as finding the right real estate agent that you click with and then let he or she take it from there. But then you get introduced to all these other people like you, who are all part of the team that helps you get into your home or to sell your home if that's what you're doing. So why don't you talk about the different kinds of people you'll be working with if you're looking for your first house?
Yeah, the expression goes, it takes a village, right? So you have not only your real estate agent, you have your lender. Then I have people on my team, right? So I have my processor, we have our team of underwriters. Then they have to order an appraisal, right? So then the appraiser goes out and looks at the home. If you get an inspection on the home, you have a home inspector. Then there's an attorney that does all the closings on the property. Then you need an insurance agent to get a binder for the home. So, it really is everyone. There's so many pieces that touch a real estate transaction that to your point, a lot of times it's just like, hey, it's just my real estate agent's going to handle all of it, but there really is a lot that goes into it, and a lot of people involved.
Yeah. Yeah. So it sounds like if you want the strongest team, or if you want to get the best deal, find the strongest team of people. And it all does start with the agent, right? The agent is mostly the one that would bring on then the lender and things of that nature.
Yeah, that's typically how it goes, right? Like a lot of real estate agents will refer out usually a few lenders that they like working with. And then typically, I have a few homeowners insurance agents that I usually will refer out. So that's usually what this business is like, getting those referral based clientele. And that's the best way to get business, right? Like that's the biggest compliment I can get from somebody is a referral. And that's something that, we've talked about it before. I just think it's such a great job to have, because when you get a call from someone, they're just like, hey, I just worked with Bob and they had such a great experience with you. They told you that this, and this. That's just, that just puts a big smile on my face, because know that what we're doing is really helping.
Yeah. And that's one thing I always click on as far as marketing with my small business clients, as well as the educational seminars and YouTube videos and things that I do, is that you can have the best marketing in the world, nothing will beat word of mouth when it comes to advertising. So yeah, you're spot on with that.
Yep, 100%. 100%.
Yep. And so here we are, about the middle of the summer here. Any nice big plans or anything fun happening?
So 4th of July, always stuff with the family. I have I got a brother and 2 sisters, and then I got 5 nephews and a niece. So I always got ranging from the ages of 6 till 3 months. So I always got stuff to do with the family, which is great. So I'm sure I'll be spending some good time on the 4th with some of my family. But no other really big vacation plans as of yet. I'm going to be staying put, and this is kind of the busy season for us. If I do some of my traveling, I try to do it more in the wintertime and kind of be boots on the ground here, during the busy seasons.
Right.
How about you?
We appreciate your dedication. Yeah, same thing. No big plans for vacation, but we're spending our money this year and completely renovating the backyard, new hot tub, new liner for the pool, getting a tree room, that kind of thing. So next year we'll be ready for the big trip again, I think.
Awesome. And one other quick thing, Dennis, one other little, just a lot of things that I hear, through media and just kind of word of mouth is a lot of things that I've heard is like, I'm just going to wait for the housing market to kind of crash or slow down. And that's just something I think is so important to touch on, because when you're in a situation where you have very little supply and very high demand, which is what we have right now, home prices don't come down. So you look at, if we kind of turn back the clock back to 08, when the market crashed in '08, there was 4 million homes for sale nationwide. There's a little under 1 million right now. And then you add that to being in such a desirable state like Massachusetts, right? We got some of the best schools and best hospitals. It's just, I think when I hear people saying, hey, I'm going to wait for the market to slow down, I get where some of the hesitancy is because they've seen it go up so much due to COVID and those low rates. But we're still looking at single-digit appreciation this year in Massachusetts. We're still looking at anywhere between 4% and 6%, which I think a lot of people would take if they just bought a home last year for $500,000 or $600,000. A lot of these people are going to miss out on that appreciation, and I think it's just going to continue to improve and build equity in people's homes. So that would just be one thing I would leave with is just if you're thinking about getting in the market, it's the longer you wait, to put it just very frankly with you, the more expensive it'll be.
Okay. Good advice there from Andrew Smalley, Movement Mortgage. We really appreciate your time with us today.
Yeah, of course, Dennis. Love doing these. Thanks for having me on.
All right. And we will hopefully have another one in the future. And I hope you have a great holiday and rest of the summer with your family.
Thank you very much. You too.